Well, looky who's here.
Yes, it's Wired Wednesday with McKenna Hansen. How's everybody doing today?
Not so bad, not so bad. How about yourself?
Can't complain. And I just want to say that I'm so grateful for all of the rain that we've received over the last month, that Cedar City is starved for the rain, and we have received, and we are blessed, let's say. And all the producers, out there, thank the Lord, I suppose, because of all the rain that we've gotten in the mountains where all the, grassland is, and all the winter feed out in the valleys. So that's going to come through. So blessings all around. But today's really exciting because today we have Chantry Abbott from Guild Mortgage up into Cedar today to talk about what's really going on with purchasing power and rates, with the home market. How are you doing today, Chant?
I'm doing good. Thanks for having me.
Yes, of course. And just a reminder, the mortgage office for Guild Mortgage here in Cedar City is located on the third floor of the Plaza building that we're currently in now. So please stop by. Rates are still good for purchasing.
Wait. You're up there with the lawyer?
Yeah, we're up there with the lawyer. They're going to keep track of us.
Whip them into shape, supposedly.
Okay, good luck with that.
I like that McKinnon said she's excited to have me. Isn't mortgage really exciting? Is everyone excited?
I love mortgages, just like I love insurance. Everybody needs to know. Well, in our industries, insurance and mortgages, everybody thinks they know a lot about things, and then you get talking to them and they're like, oh, well, that's speculation.
Yeah.
Or, oh, I didn't realize it worked like that. Or, wait, you mean I'm not covered for things? I love that conversation.
Right.
So it's the awareness factor, right, of what people, and putting things relativity, like relative to 20 years ago, we're exactly where we were with rates, right?
Yeah, pretty much. Yeah, I mean, everyone thinks so. I mean, you read any headline, you can just go Google it now. Are we going to have a housing crash and a housing bubble?
When we bought
it's all telling you, it's crazy.
When we bought our place many years, our rate was 7-something. We go, wow, that's great.
Right.
Yeah.
Right. So relative to all the things going on, rates are exactly where they were 20 years ago. Purchasing power is the same that it was 20 years ago.
Right. It's like saying that, vehicles are so expensive now. Well, it's all relative, right? Compared to inflation, it's the same.
Right, and fuel. Let's talk about fuel. Let's get off on the fuel tangent for just a second.
No, fuel is more expensive.
Not relative to the income, though. If you take the average amount of income and the price per gallon that it was, it's still relative to the exact same price we were paying in the 50s.
I'm going to have to call BS on that one.
Do it. I did the math. It is relatively
I remember
the same.
buying gas for a quart for crying out loud.
Right, but what was the average income?
I was making like $1.50 an hour, so that wasn't that big a hit for me.
Right, but if you take the average wage, everybody wanted minimum wage to increase to like $15, right?
Yeah, that'll work.
No, I'm just saying, like at $5 a gallon, that's still in the same percentage with the standard deviation ratio, and I could get all math.
Okay, you are putting me to sleep now with those.
Right. Back to mortgages. Chantry, kind of give us the run through of what's happened over the last quarter and where we're seeing things go.
Yeah, it leads in well because we're talking about inflation, right? And really what's happened is the government tries to control inflation by manipulating interest rates. That's one of the ways that they can control inflation. And they have a couple different levers that they can pull, and they've really been doing this from an extreme standpoint since the market crashed all the way back in like 2008. So when the market crashed in 2007, I'll back up one year. In 2007, they started seeing things were too hot, so inflation was too high. And so they started raising rates. So when they raise rates, it discourages people and businesses from borrowing money and expanding or buying toys, or it just keeps less money in circulation. It's trying to control inflation.
One thing I've noticed happening is that as I drive by the various car lots in town, they used to be relatively empty.
Yeah.
And they're not there. I see more cars in the lots now.
Right.
Correct.
And that's I think an outbreak of
probably because most people buy just like they buy a house, they buy a car based on payments.
Right.
And now you can't quite get the interest rate you wanted and the payment you wanted, so it slows down the spending of money. So that's the whole point of what the government's trying to do, because inflation is very scary for the economy because it can cause a lot of major issues. Think of all the people on fixed income. Think of if you're retired and you're on fixed income and all of a sudden you had your retirement mapped out and everything was fine in 2018, but the difference between what everything costs right now in 2018, you're in trouble.
Absolutely.
So they're really honestly...
Oh no, the government says they'll take care of it.
Yeah, exactly. I think what they did is that they panicked, in my opinion, they panicked too much when COVID hit and thought it was just going to completely collapse the economy, and so they just did everything they could to get money out there. Lower rates, give people money, give businesses money.
That was good.
And they overdid it.
Absolutely.
So now they're like, oh my gosh, we overdid it. Inflation got out of control. Things got crazy. We're going to try to backpedal our way out of this. And from my standpoint, one of the main things they can do is raise rates. So that's what they're doing right now. And they're going to continue to do so until inflation gets under control. The average interest rate in mortgages over the last 60 years is 8%. Everybody knows somebody that bought a house or had a mortgage in the 80s and probably had 15%. I've done mortgages for 15 years, and it's kind of always been in the neighborhood of somewhere between 4.5 to maybe 5.5 or 6.5. You know, somewhere between about 4.5 and 6.5 has kind of been the norm. Mm-hmm. I don't even know if I'd ever done a 30-year fixed rate mortgage below 4% until 2020, honestly. If I had, it'd only been a few. Most of the time, if you were getting somewhere in the 4s, it was like you got a really low rate.
Right. You got an excellent rate.
Yeah, there's a lot of times that it was sort of a refi boom. In fact, there was a refi boom. This was before I was in the business, but in 2003, people were refinancing down to like 6.5%. And it was a refi boom because all the rates before that were like 8+.
Right.
So if you read any article you could Google right now, and it would tell you housing bubble, market's going to crash, terrible time to buy, rates are too high. Listen, fear sells, okay? Now is truthfully, other than the one thing that, yes, you missed out on that opportunity of 3% interest rates. They're now 5 or 6.
But what were people, hold on, let's pause right there. What were people giving up to get to those 3%?
Correct. So everything else about buying a home the last 2 years was not good. Buyers were paying over appraised value.
By like hundreds of thousands of dollars, not like $10,000.
Yeah, they're dealing.
Hundreds of thousands of dollars.
And part of it was an emotional frenzy in some way because they couldn't get an offer accepted because they'd been bidding on all these homes. And then now they got the home that they like and they're just exhausted with the whole thing. This is the 9th property. And it turns into a 15-person bidding war. Literally 15, 16, 17, 18 offers on a house. Listed for 500 ends up selling for 6. Well, it doesn't appraise for 6. So now people are paying over appraised value.
And they have to pay it in cash. They can't loan against over $100,000 in extra money.
So the people that were getting their offers accepted were heavy down payment borrowers, understanding that in order to get a house, you have to pay more than appraised value and drop in some of your cash. My whole history of, again, 15 years, I've done like a few deals ever where people paid more than appraised value. And when they did, it was like, well, it's got all this acreage in this shop and we're not getting a bunch of value in the appraisal, but the property's that valuable to us, so we're okay paying it.
Right.
Not just normal homes in normal neighborhoods. I don't remember any.
Like on less than a quarter of an acre.
Yeah. And in 2020 and 2021, almost everybody had to. So what happened was these low down payment, first time home buyer, folks that weren't willing to waive contingencies, weren't willing to waive appraisal inspections, weren't willing to put non-refundable earnest money. We had some people putting $20,000 non-refundable, meaning if something came up with the house that you didn't like, or they found mold in the home inspection or something major,
you're out 20 grand.
You either just buy the house and deal with it, or you give your 20 grand away.
Yeah.
It was nuts. You almost had to do crazy things to get the house. The benefit was you got that really low mortgage rate. Now though, it's swinging to be favorable to the buyers. Prices are definitely not as high as they were. People are not overpaying. In fact, we're now seeing appraisals come in higher than purchase prices. The big thing right now is there's sellers that are willing to help cover buyers' closing costs, help buy down interest rates for buyers so they can get a lower rate. Like a lot of our buyers are getting an interest rate of 4.99. That's great, right?
Right.
That's not bad.
It's normal.
They're having the seller help. They're asking the seller to contribute to buy down their rate. Their seller's paying for closing costs. They're not having to come in above appraisal. They do home inspections and they're getting repairs done like normal, like it should be. So now's the news has made it seem like it's a terrible idea because the market's going to crash. We can go into that. I don't believe that's the case. I think we obviously went past the ceiling.
Right.
of home prices. We went over too high. It went too high in the end of 2021 probably, and then it started to mellow out. But they were paying. The reason it went too high is because people were paying over appraised value.
Significantly over appraised value, not like a couple $1,000s, everyone.
Yeah.
Like hundreds of thousands of dollars.
$100,000. Yeah. So now's really, truthfully, the time that you can negotiate. You can get your rate bought down. You can get your closing costs paid for. If you're a first-time home buyer with 0 down, you can get your offer accepted. If you have a home to sell, you can sell it and buy, because that's what every move-up buyer typically is selling and buying at the same time.
Right.
Yeah, that wasn't an option 2 years ago. In the last couple of years, it's an option now. We've got some going right now. So the only thing that's different, that's worse now than it was higher interest rates. But here's the thing, home prices in the long run, I don't know what they're going to do in 6, 12, or 18 months. Okay, I'm not a flipper, I'm not a day trader. We're going to have ebbs and flows in the market.
Right. The pendulum swings from one high to the other.
A little too extreme always, right?
Yeah.
5 years from now, I'm pretty confident to say home prices are going to be higher than they are today. 10 years from now, I'm very confident in saying home prices will be higher than they are today. Everything's going to be more expensive 10 years from now, right? That's just the way inflation works.
From 10 years ago to 10 years today to 10 years in the future,
If you averaged out the course of history, the best time to buy a house was last year. It was always better the year before, in most cases, if you're thinking in terms of home value.
Right.
Okay. So don't let the news tell you that now's a bad time, because guess what? Interest rates are going to go up and they're going to go down. And there's most likely going to be a point where interest rates get to 4, 4.5. I don't know if we'll ever see 2 or 3 again. And guess what happens then? You refinance.
I was just going to say, this leads into my next question. How old is the average mortgage? We're not seeing people hold on to those 30-year mortgages anymore. Even a 15-year mortgage, how often do people refinance?
Yeah, the average mortgage is like 4 to 7 years.
A whole 4 to 7 years
So
of the 15 to 30.
Selling their house or refinancing. Because if the thing about buying, okay, so you get in, you lock in rate, maybe your rates, let's just call it 6%, which is disappointing compared to what they used to be. If rates go down, you refinance. It's not a big deal. If we woke up tomorrow and interest rates were 3%, all the available inventory would be gone. The first-time home buyers would be out of the market, and people would start playing more than appraised value, and it'd be a bad time to buy again. But if you own your home and rates go to 3%, real simple, refinance. You're protecting your worst-case scenario. Because we could wake up and rates are 8%. But
Right.
if you get a mortgage and you're in it, well, you're stoked about your 6% now. So you can't time interest rates wrong. You're going to put yourself in a position where if they go up, you're excited, and if they go down, you refinance and you're excited. The only mistake you can make is sitting on the sidelines hoping that prices are going to come down, and then what if rates get higher? I'm not saying they will or they won't, but anything's possible. It's possible. So I really believe now, if a family member of mine was wanting to buy a house, I would be like, now is honestly a better time. You can get almost anything you want as far as timing, what we call contingencies. Maybe you got a home to sell, rate bought down, closing costs paid for. All kinds of things are in your favor now, where the last couple of years, you almost had to do something silly to get your offer accepted, like pay above appraised value, put 20 grand non-refundable.
Will your first child do that?
Yeah, that's what it felt like,
Well,
honestly, and it was scary for us as mortgage people, because we're seeing these folks put themselves in really uncomfortable situations. In Utah, the purchase contract is really designed to protect the buyer. It doesn't protect the seller that much. It protects the buyer. It benefits to the buyer that if something comes up, you can get out of it with almost no harm, no foul. There's deadlines that protect you. And the only way to get your offer accepted in 2020 and 2021 was to take all that protection away.
Right, which makes the buyer really vulnerable.
Very.
And if I'm putting $20,000, I mean, to me, earnest money is like a whole $500, like something that I would miss, but not like work 5 years to gain back.
Yeah.
$20,000 in earnest money to me is 5 years of hard work of saving and figuring that out, even more than 5 years, right?
Yeah.
But it goes into that super vulnerable stage, and you're willing to give up like repair costs that are going to cost additional money,
Right.
Right. And different things in that nature, just to make sure you're getting into a home, not your perfect home.
So I'm glad you said that. I wasn't going to bring this up. They did a survey, and over 50% of the people that bought a house in the last 2 years regret their purchase.
Buyer's remorse is a thing, even with houses.
The reason being, I believe, is that they didn't ever quite get the home they wanted. They probably offered on 9 homes and they settled on the 9th one and overpaid. And so it's kind of like, well, we got a really low rate, but it really isn't what we wanted. Well, now you can get what you want.
Right.
You can take time to look. You can take the weekend to think about it. That was the other thing, is like, people were writing offers sight unseen, which in some cases I get it, you have to, especially if you don't live here. But you're writing an offer sight unseen, putting non-refundable money down. You go see the house and you're like, I didn't realize that it backed up to that street that's super loud, but you know what? I guess it is what it is. It's just the only offer we got accepted, so let's buy it. So buyer's remorse. More people are disappointed about their purchase in the last few years than now. But so here's what's going to control rates is the inflation. So pay attention to that. If the news continues or the government continues to come out and the inflation numbers are high, it's very likely they're going to continue to raise rates. Hopefully that's settled down. We'll see. We're starting to see it, cars, stuff like that. I don't know what the numbers look like, but to me personally, I feel like inflation has slowed down. People are already pulling back. Don't you feel that?
Oh
way?
yeah, the energy, the frenzy's dying down.
Not just in real estate, just in spending.
Oh yeah, spending period.
I feel that way.
Well, and I feel like less people are actually going through, and I mean, I went to Kohl's, and I don't mind Kohl's as a store, a clothing store, but for school shopping, the frenzy was there. Like everything was totally thrown on the floor. It wasn't being like, the storekeepers couldn't, or the store clerks couldn't even keep up with the amount of things going on, right?
Yeah.
I feel like that's what the market's doing now. Like, we're seeing all the things that happened. We're going shopping and we're like, oh man, we're going to avoid that section.
Yeah.
We're going to go over to this section where things are a little more put together, per se.
Spend a little less.
Spend a little less, be a little bit more organized in our purchases,
Careful.
regardless of what it is actually, right?
Yeah.
And you're seeing it in grocery stores too.
Yeah.
The case lots are back to normal. Right? They do them every quarter, not every 2 weeks. Right?
Yeah, people are slowing down. So and then home prices, it's just like anything, it's supply and demand. How many homes are available? If there's not very many homes available, the sellers can kind of control the terms. If there are a lot of homes available, the buyers control the terms. There's starting to become more homes available, so buyers are controlling the terms. That's why I'm saying now's a really good opportunity. I believe this window will close though. I don't think that 5 years, 3 years, even maybe a couple years from now, we're going to have a large amount of inventory available here in southern Utah. A couple reasons.
Now, that surprises me because our inventory is being added to at a breakneck speed as far as I'm concerned.
Which we need it to. There was a frenzy of too many people buying. Now there's like whatever the opposite of a frenzy is, of everybody being like, oh my gosh, I'm going to hold off and see what happens. But there's a few things that I believe long term we still don't have enough homes. Statistically, they say we're 5 million homes short in the United States as a whole.
Wow.
And it's because population is growing and builders built really crazy there for a minute. Mm-hmm. But historically, since 2008 happened, we haven't built enough homes to keep up with population growth. Okay. So there's this backlog of shortage that's happened. Labor. Nobody wants to be a home laborer anymore. Everybody wants to be the builder, but they don't want to be the one that's nailing the board together.
Right.
So we don't have enough laborers.
Which increases the shortage because the production lessens.
Mm-hmm. We have the largest demographic right now in the United States that we've ever had of 29 to 32-year-olds. So more 29 to 32-year-olds in the United States right now than ever, like as a percentage, right, of the population. The reason that number matters is that's like the average time of when they're having new household formations. So very common that in Utah, you get married and have a kid around then. Well, now you can't live in mom's basement anymore or with some roommates, so you need a home of your own. So that's a household formation. The thing is, that doesn't add a home. See, when a 45-year-old buys a new home, they typically are selling a home that they had, so it's a break even to the housing inventory. Right. When a 29-year-old buys a new home, it's taking one away from the housing inventory, not adding to it. Then the next part that I think that we don't talk about enough yet.
We have about a minute to talk about it.
Okay, perfect. All the people that got these crazy low rate mortgages that would like to upgrade and buy a different home, or maybe they have buyer's remorse and they bought the house they didn't love. They're like, you know what, we really need a yard. We didn't get the yard we wanted. We really want to buy a new house and we have all this equity. So let's sell our house and buy it. Then they see, oh my gosh, we have a 2.99 interest rate. How could we sell that? So I believe what a lot of them are going to do is they're going to wait until they can save up a little bit, and they're never going to sell that home. They might wait 2 years to buy the home they wanted, and they're going to just rent their current home out because the rate's so low. How many people are going to sell a house as a 2.99 rate?
Right.
Plus rents have gone up, so now they can cash flow, and it makes sense to keep it as a rental.
Or if you're in my case, why am I going to sell a home that's costing me taxes and that's it?
Yeah, you're
Right.
not going to sell your house.
No, exactly.
Yeah, you're not going to sell your
No,
house.
not at all.
Chantry, how do we get a hold of you?
Yeah, well, you can just come over here and see us here in what's this called, Crown Plaza?
Premier Plaza.
Premier
Plaza. I messed that up.
Premier Plaza. Or you can call us at 435-674-1090.
Awesome. Thank you so much, Chantry from Guild Mortgage, joining us today and going through all of the details of purchasing, what the market's doing, and everything else. This has been McKenna Hansen, your local Farm Bureau financial agent specializing with commercial and succession planning. My phone number is 435-592-2021. Thanks for joining us for Wired Wednesday.
Thank you.